Hi, my name is Sebastien de Montessus. I'm the CEO of Endeavour Mining. Endeavour Mining is a FTSE 100 listed company, which is operating exclusively in West Africa. We're the largest West African gold producer with very strong balance sheet, a lot of growth, and more importantly, also one of the lowest cost producer in the world.
Sebastien, good to see you again, sir. Right, Q4 numbers out. I guess we better start with those, and then we'll kind of get into a more meaningful discussion. Go for it. What do we need to know about Q4?
Most important is, overall, the full year 22 results, marked our 10th consecutive year of meeting or exceeding, our guidance, which is always, impressive in this industry when you're able, to deliver, what you said. In particular, given the difficult year last year was, for a lot of producers in the inflationary environment. If we were, to summarize last year, I would probably say that we produced 1.4 million ounces, cementing our position as, one of the top 10 gold producer. Our all-in sustaining cost, which is really the production cost, were below $930 per ounce, making us, one of the lowest gold producer in the world, which is, obviously, again, pretty impressive in the current inflationary environment. So overall, very strong operating performance. We generated above $1 billion in operating cash flow. We ended up, the financial year with a balance sheet with net cash position of $120 million. And we've been able to continue to progressively increase our shareholder return policy by distributing, $300 million back, to our shareholders by way of dividends and buyback, which is making that about 6% indicative yield, for the Endeavour stock, which I think is, pretty attractive. And maybe the one thing that I should emphasize also is we launched, our two key growth projects, the expansion of Sabodala-Massawa mine in Senegal, and we're also building a new greenfield mine in Cote d'Ivoire called Lafigué. So that will be helping us, to increase, growth over the next few years. And on top of that, we made one major discovery in Cote d'Ivoire with a 3 million ounce, discovery at Tenda-Iguela, which is another greenfield in Cote d'Ivoire. So yeah, pretty happy with this, momentum in 2022 that should carry over in 23 and 24.
Well, here's the thing, Sebastien. You're happy with that 1.4 million ounces. Who wouldn't be an AISC of whatever two was it 928? I think we're talking about. So good suggests good margins to be had, and you're building a nice cash reserve, and I think you should just under $300 million worth of returns to shareholders in 2022. But the growth story needs to continue, and the difficulty with large companies, they kind of reach a point where it feels like it just gets a bit sluggish, and the growth story gets harder to tell. I'm looking at share price from June 2021 through to today, 15% increase. Even with a peak share price, it's about 25%. The share price in that very difficult precious metal environment for gold and silver was sluggish. How do you change things? Because of the disconnect between commodity prices and equities during that period, how do we change things going forward?
Well, I think you're right, and there are several factors. If you look at our share price, this is mechanically linked, to the fact that we moved, into a London listing, in 21. If we look, on a relative basis now, we've been one of the best performing stock, in the sector. If we look at growth, and I think, this is where, we should be all heading. We need to put growth. We're pretty lucky, as you said. A lot of the large groups don't have any growth. And in fact, are desperate, to find, the next growth projects. We're just building two now, and we keep discovering, new greenfield, which hopefully will turn into the next projects. Just with those two projects that we're building right now, our production will grow by, at least 20% over the next 2 years, which is quite significant in the given the competitive landscape, where the others, don't have much growth. But on top of that, what we like is, as you know, we are operating in the most attractive jurisdiction in terms of discoveries. So West Africa is today, the largest production for gold region in the world. But on top of that, it's been for the last 10 years, the biggest region for discoveries. So if you want to find the next projects, you need to be in West Africa. And we enjoy, the largest, position in this region, operating across 4 different countries. So yeah, I think that, given the exploration efforts that we're making, you will continue to see further, growth, coming out from, our portfolio.
Okay, so you've been quite a generous dividend payer, 6%. That's significantly higher than most of your peers. But you don't want to be known as a dividend-only company. So how do you get that balance between working at, the use of the free cash flow that you've got? You talk about Lefigué and obviously Tanda-Iguela as kind of greenfield and the future of the company. But what else are you doing in terms of that allocating capital, just the decision making around the allocation of capital?
So I think what's interesting and quite unique is the ability, to continue to maintain a very low production cost, which obviously in strong, gold price environment means that we are able to generate significant, cash flow. When we started, the 2 projects, construction projects, we were net cash positive, on the balance sheet, and ended up, 22 with a net cash position on the balance sheet. So despite the fact that, we are investing heavily in building those 2 mines, we believe that, thanks to the gold price environment and our low production cost, we will end up that phase in 24 with still a very strong balance sheet, and therefore will be benefiting, from there, with even further, cash flow on the balance sheet, which will allow us to continue, to grow our shareholder returns, program by increasing, dividends, but also increasing, our buyback program.
Okay, so it's a bit of a look. I think you talk about allocating, more money on the dividends than you had given guidance for, and with the share buybacks as well. Obviously, that's all positive for shareholders, but given there's also a narrative in the background going, well, it's better to buy physical gold as a hedge against inflation and all of the other pressures we've seen, given what, equities have, failed to do last year. Do you think that your plans are enough to entice, shareholders to continue buying and new shareholders to come in with the backdrop of this kind of higher gold price? We're hitting like $2,000 last week at one point.
Well, I think it's, you've always have a lag between, physical gold price and the gold equities. And I think that, that's what we're going to see again. I'm always cautious when you have, a big spike, in the gold price, on a very short period of time. The market, is waiting to see whether this is, stabilizing as the next step. So if you look at, over the last few years, we went back, to 1,200 gold price, then we rallied, to, 15, 16, then bounced back, to 14. Once we started, to, stay around 1,400, then, it started to move back, to 1,800. Then once at 1,800, it stabilized around 1,600. So now what we're seeing is, it's getting more and more often, to 2,000. As soon as it's going to stabilize around the 19 and 2,000, people's going to realize, how much cheap, gold equities are. If you realize, you can buy today, Endeavour stock and, a lot of the gold stocks, on 4 or 5 times, multiple of EBITDA. When in other sectors, you would be paying sometimes between 15 to 20 times EBITDA. So yeah, I think there is a massive discount on gold equities, and as long as, and I'm pretty bullish on, where gold price, is heading. We should see, significant re-rating on the gold equities.
Right, and obviously, exploration companies, development companies, and producers, have different kind of leverage points. But you've all, well, I'd say maybe you're an exception here, but you've all seen all-time kind of lows in terms of how the market is valuing some of these companies. Do you think producers are going to be in a better position going forward, or is that kind of magic and allure and romanticism of exploration leverage still going to, draw people away from investing in companies like yours?
Well, when you've got, a shift, where the market, looks more and more into, gold equities, you basically are looking at new inflows from generalist funds and people, wants to basically have a small allocation, of, their entire wealth into gold. It means that, they are looking, for, the gold upside, but also for safe investment. And therefore they tend, to first go to, producers, simply because of the cash flow generated by the producers before, seeing that flowing down, into projects and exploration. But if you are able, as a strong, producer to demonstrate also that you have growth, inbounded into your profile, which we have, with, 2 projects in construction and also a lot of exploration coming up, then I think you probably have, the best of both worlds.
So, okay, so and tell this in terms of how do you value companies like yourself? Every serious job is to tell me their company's undervalued. You're at whatever 1.7, 1.8 billion pounds at the moment. We've seen a couple of exploration companies, shape of Great Bear. We've seen bought out 1.6. We've seen Newfound Gold valued at over $1 billion for, well, we don't know how many ounces they've got. Are companies like yours attractive to the big guys trying to kind of backfill, their reserve numbers? Do you think there's more M&A happening? Are you part of that story? Are you acquisitor? Are you being bought? I mean, how do you view the future?
As I keep saying, I'm working for shareholders, so I always do, the right thing for shareholders. And, in our business, even my chair, has a price. So, if someone wants to buy it and he puts the right price, and it's the right.
But my point is, how do you value it? Because if you're seeing those explorers getting plus billion-dollar valuations, they don't have cash.
So I think in those cases, it's really large projects which are required. For the big gold producers which are short, in fact, of growth in the future. That's why we've been seeing a lot of further consolidation simply because players are looking for growth and they don't have that in their portfolio. The good thing with us is we do have that growth already embedded into our portfolio, and we keep investing in exploration to prepare the future. So I think that it means that we don't necessarily need to do M&A to continue to grow. We have that, but at the same time, we're not shy in doing acquisition when it's required. So if we see good opportunities, we'll be looking at it. And if one day one of the big guys thinks that we are an attractive platform, then we're always open for discussions. I do believe that the market will continue to consolidate. Because we are a tiny industry compared to other base metals industries. So I think you should see, more and more consolidation. The fact that, Newmont is trying to, buy Newcrest, is a signal. And I think you'll see, probably further into that market.
And do you think some new money coming into this space? I'm talking about, like mining's tiny. I always say to people, if you put together all the producers, developers and explorers, together as one company, it would be half the size of Apple. We're a tiny industry, but we are starting to see some relatively big funds come into the space looking to see what the fuss is about. Is that going to be a game changer too, or are you companies like yourself relying on industry?
I think it's going to be. I fully agree, Matt. I think it's going to be a complete game changer. I think that a lot of the generalist funds were disappointed by the relative low performance of gold equities in the last cycle. So, when we were, back in 2012, between 2008, 2012, where the gold price, rallied, from 1,000 to 1,800, you saw, massive investment into low profitable, projects. So basically, margins reducing. So despite the fact that you had, higher gold price, people were doing, crazy M&A, crazy investments, no discipline. Those lessons have been learned in this sector. At least, all the top, companies, are much more disciplined towards that. So the market and generalist funds are still, waiting to see, the gold price stabilizing and continuing, to grow, to rush into that sector, because the discipline around the way people have been operating demonstrate today, very attractive returns. And as we said, 4 or 5 times, EBITDA multiple is something you can't find, today in other sectors, in particular profitable businesses. So yes, it's becoming more and more attractive for them.
Old school. There you are making money. Goes against the grain. Just so, can you just again remind me of some of the numbers with regards to Sabodala, Massawa expansion, obviously Lafigué as well, and then Tanda-Iguela in the future. What are the sort of numbers we're going to be aiming for? Is it kind of nice, because at 1.4 million it's starting to get quite hot and heavy there. So what does the future look like?
So in terms of growth projects, we've got the Sabodala-Massawa expansion. That's about $290 million capex over 2 years plus period. We've got now about 55-60%, of the capex which is committed. Everything, is progressing well there. The civil works, the milling, the BIOX areas, and so on. So we're expecting production to start in Q2 24. This will allow us, to bring production at Sabodala-Massawa in Senegal from about 320 to about 400,000 ounces a year. So, making it, again, one of the, biggest assets, in the world, starting to be in the tier 1 field. And then you've got the Lafigué Greenfield project in Cote d'Ivoire. That's about $500 million, $450 million, capex in total. Commissioning expected again end of Q2, beginning of Q3 24. Progressing again extremely well. And this will be 250,000 ounces, yearly at very low all-in sustaining costs, so below $900, all-in sustaining costs for the next 10 years. So, those are, significant projects. This is the second phase of building, 2 projects at the same time. We did it, back in 18 and 19, where we built in a row Houndé and Ity, which are, each of them producing between 250 and 300,000 ounces at low cost. So, we like, to have those, capabilities, internal capabilities on, building those assets for the future.
Right. Okay. Now, obviously, all of this organic growth funded by, the large cash flows that are coming in. But one of the other big numbers that you're trying to hit is around your exploration program. Like you say, you've hit guidance 10 years in a row. Okay. People should trust your ability to actually, do what you say and say what you do. But on the exploration side, what does that kind of ramp up, or what's your expectation of that ramp up over the next 3 years?
Sure. So what has been, exploration has been one of our key pillars. That's the cheapest way, to get returns, to shareholders by discovering, your next mine and your own ounces rather than having to buy them. So what has been remarkable is that back in 2016, when we started at Endeavour, we launched a 5-year exploration strategic plan where the objective was to find between 10 to 15 million ounces of indicated resources. So we not just only said, we are going to invest, $40 million a year in exploration. We effectively, back in 2016, said we will find between 10 and 15 million ounces of indicated resources. And the reason we were able to pinpoint, what the target was in terms of discoveries is because of the very, very strong prospectivity of the areas, where we're working. As I said, West Africa is today, the biggest, prospective areas for gold discovery for the last 10 years. And at the end of this 5-year program, we effectively found 11.5 million ounces of indicated resources. So on the back of that, as we grow, we said, okay, now we launch the new 5-year exploration strategic plan, but this time we're going to find between 15 to 20 million ounces of indicated resources. And in fact, we keep discovering. And the fact that last year we discovered this new Tenda Iguela, greenfield, exploration, has been just 15 months of drilling program. And we already have 1 million ounces of indicated resources and 2 million ounces of inferred resources at above 2 grams a ton. So we already know that we've got there, our next project, for the future. And that's what we love. With West Africa is, it's so prospective. There is so much still, to be found in terms of ounces.
Well, so how do you feel about the economy? Again, talking about gold producer. So gold is important there, but also producing cash is important. You've got banking crises of the past few weeks. Looks like it may blow itself out, but inflation hasn't gone away. You've got the Fed and other governments raising interest rates to kind of deal with that. How have you dealt with it? Do you see that? How far in the future do you see that being a variable which you still need to, be worried about?
So I think in terms of inflation, it's going to stay, for a while. Around. And this is why it's important, to maintain a very low cost, production profile, which is what we have. We've been able, to consolidate on our side, a lot, our supply chain in order to renegotiate each time as we grow, our key procurement contracts, which has allowed us, to maintain a very attractive price despite the inflation. Being, a platform where you're the largest, gold producer in one single region means that you have a lot of synergies also in the way you operate. So we've been able, to face and try to mitigate, I would say, those inflation. A lot of productivity also, and this has played well as we demonstrated last year with, $928 all-in sustaining cost, and one of the only company that has maintained and achieved its guidance versus the rest of the sector. Now going forward, I'm pretty upbeat on the fact that gold is just on the rise. When you look at the environment in which we operate, there is only one way, which is up. We've been printing billions and billions and billions of dollars in cash over the last 3-4 years, between COVID and trying to recover from COVID. It's creating a significant inflation environment. Interest rates are on the rise, but we know that at some point interest rates will have to go back down, simply because the economy will need some growth if you don't want major recessions. And this will be a signal where the gold price will continue to go even further than 2000.
Okay, so I'll just finish off. Obviously you're obviously quite pleased with the fact that $928 an ounce all-in sustaining cost is one of the lowest, if not the lowest in the sector. And obviously in a rising gold environment, for some companies, that additional margin will cover a multitude of sins. So in terms of my ability as an investor to look at the producers, I can't invest in everyone. I'm not going to spread myself thin. What do you think is the makeup of a good producer versus something that perhaps is a little bit, marginal, we'll call it?
Well, I think a good producer is, a producer which is diversified over several assets. You don't want a single asset company. If you've got a problem, on the asset, then, you're failing. While when you have, several assets, you can mitigate, some of those operational risk. So, diversified over several assets. Low cost, I think, is critical, and being able to identify, people that over the last, few years have been able to maintain their cost, in particular below $1,000, I think it is a good signal on, the discipline that the teams have, in a changing environment and volatile environment, to adapt themselves, to this. And I think that's a very strong signal. If you look at some of the majors, cost just goes, up and up. You've got now, some of the majors that were operating at 900, which are now operating at 1300. All-in sustaining says a lot. It means that they're not adapting, the structures, to the new environment. So those are probably the two things that I would focus on.
Yeah, no, I think a lot of those CEOs who I've interviewed and spoken to, they talk about a new reality, meaning that I guess the market and the economy is getting the blame for their inability to adapt. So it's an interesting point you make. Well, Sebastien, appreciated the conversation today. Great update, obviously great 2022 for you guys, and 2023 fully funded, raring to go. So thanks for the call.
No, thank you so much, Matt.